Hey, what's up, guys? Thanks for jumping on. Figured I would do a fairly brief, impromptu little chat, Q&A, whatever you want to call it. So if you have anything on your mind that you'd like to discuss today, like, any particular gold, silver, mining stock, crypto themes, anything in general, feel free. It doesn't even have to be investing related. I don't care. But look forward to anybody typing into the chat if you want to hit on a topic. Happy to talk a little bit tonight. I'm just going to pop in and off, on and off of here, and I think I'm going to invite some other folks. So hold on. Tassin. So the news is that we're waiting on assays, but I'll just tell you something. This thing's going to be, I think this thing's got the real good chance, a real good chance to be a monster. And you've heard me talk about this, I'm sure. I don't know if you're a free or premium member, but we have a first vanadium name. And the first vanadium name was changed when the vanadium market was very hot. That vanadium asset at Carlin is still very valuable. And in fact, I'm bullish on vanadium and the price. So I think you could argue that basically the vanadium asset is worth more than their market cap now, but let's just say it's worth nothing. The reality with Nevada and monster discoveries, there are like a handful of geologists that have been around that are credited with multiple, multi-million ounce, 5 million ounce, 10 million ounce discoveries. One of them clearly who has driven the success of companies like Newmont Mining. I think he might have had a hand in making Newmont Mining what it is today back in the 90s. Gold Standard Ventures, which he launched. Dave Matheson is who I'm talking about. And when I've learned more about him, he's the guy. He's the guy in Nevada that you want looking for elephants because he knows how to do it and he looks at things outside of the box. So when he and Paul Cowley got together and essentially, looked at Carlin deep gold potential instead of just the near surface vanadium asset, he's gotten very excited. And you can see some of these interviews. They're on First Vanadium's website. I also have them here on the YouTube channel in terms of just me interviewing those guys. But, it's one of these things where we just have to be a little bit patient because they have to drill more, and we have these assays that are pending. And I don't know if they're going to show anything significant or not. They had the right mixture early on, first hole, that Dave was encouraged by a lot. And then we've got these other few holes that have come out. And there's nothing, earth-shattering about it other than when I hear Dave Matheson say, we're onto something that could be similar to gold quarry. Gold quarry is the nearest asset and deposit to this Carlin asset. It's over 20 million ounces of gold. It's a monster. So I think Dave, what I really like about him and even like Paul's very, very solid CEO. He's a good steward. I don't have any concerns about over diluting or whatever. And Dave, he's looking for elephants. So when you're looking for elephants in this wild business, this speculative business, there's just a lot of risk. I mean, most companies that look for this stuff, they don't find anything. They don't find anything economic. So that always exists. But I'm very encouraged by the talks I've had with these guys. And it's one of these situations where it's like, okay, we've got that one in the bank. I've got it on the books in a big way. And I'm just waiting. I don't really sweat the outcome on the timing too much because we can't control it. But I'm very excited for not only what they're going to have with these next assays, but they did a deal with Dave, First Vanadium, that is, on his AVP property. Now this thing, it's earlier stage as well, but I can tell you that there was there was a rush to get this thing once it was in play. And I'm very happy that Dave ended up going with First Vanadium as the vehicle to put it in. So First Vanadium is now a formidable gold exploration company focused on Nevada with a vanadium kicker. And I've told them, I think we're going to get into some better weather here soon. Going into November, they had the drills there, and I said, go drill more. They were going to shut it down, and they just wanted to be prudent. These guys are prudent and they're pros. And I said, if you're onto something, go. We'll finance you. It's not a big deal. Go drill a few more holes. So we'll see. We will see about that in terms of those assays in particular. But I'm very excited about First Vanadium because you really have that vanadium backstop. And then you have now another second property that has high potential. So you're spreading the risk around a bit. And then the Carlin Gold process is going to play out. And I think this is one that has that potential to go up 5, 10, 20, 30 fold. Because even if you're talking about a quarter of gold quarry, this thing it's crazy. Reg, I'm going to get on that. Can you comment on the recent transaction? Okay, let me see. So I'm going to be honest with you. I didn't even see it. I didn't see this news. So thank you for the heads up. I don't know when this happened, but I took Geribaldi off of my, and I don't have SK. I don't have SK on my main screen. Okay, so they're going to acquire, and this was just a few days ago on Friday, Sprott Foundation. Okay. I mean, I think SK is making a play here, obviously, and I'll have to get up to speed a little bit on it, but, the fact is that with Geribaldi, you guys know, I mean, this was such a big, monstrous winner for us, and then it was a dud. And we've traded it successfully a couple of times to make up ground. But the fact is that the management team led by Stephen Ragosi has failed in terms of execution. It has nothing to do with necessarily the quality and size of the Nickel Mountain ore body. I have these principles in play that I've been sticking with, and I feel good about it, which is that if you're a premium member, you see when something goes into the penalty box. We put a core portfolio holding into the penalty box if we have a company that just does not execute its crickets, or they just continue to screw up or can't make anything happen. For long periods of time, they'll go in the penalty box. If you're over diluting the hell out of your share structure and desperately raising money at the worst times, you're going into the penalty box. And there can be some other scenarios, but those are the two most common. And I don't sell them outright. We put them in a holding pattern. And I think it's really tough to get out of that because you've already established that, from my perspective, you can't cut it, as a CEO or as a management team or whatever it is. And so what do I want to keep my money into your deal for if you don't know how to do any marketing whatsoever? You don't spend any money on getting new investors and visibility out there. You don't even call or contact or talk to your biggest shareholders ever. This is rookie type of stuff. Much less, Steve he is that guy. He's not a geologist. He should have been on top of that stuff, and it really has been very disappointing. So Eric, taking the SK piece, SK's got a lot of potential, just like this entire corridor has huge potential up in the Golden Triangle. And SK has obviously been a big, big winner. I missed it primarily because I was disappointed and skeptical of that company in terms of execution, but they've obviously had some really good success. So kudos for them. They're taking that piece of Geribaldi. Maybe they will acquire them, it looks like, at some juncture, because obviously their paper is worth a lot more than Geribaldi's, and perhaps they can do something more meaningful with it. So I think it's a positive for Geribaldi. to see somebody making a play for it. Eric is probably just hedging his bet in the sense that he gets the SK stock, gets that side of things to not just hold Geribaldi, but he still has the Geribaldi under the books. And so I'm sure they've got something cooking, on the SK side and with Eric. He doesn't usually do stuff like that unless there's a bigger plan. So stay tuned, I guess. I do need to look into it. Hey, Jim. I have to talk to the Medallion guys, which I plan to do this week. I was going to do it late last week and didn't have a chance. I like Medallion. I like the rare earth sector. I think it's also Medallion is trading really well and holding in well versus the older days when it would have just putzed back and turned around and cratered. So I've not been buying it. I still have a full position in Medallion, and I will say more to be revealed on that because I just have to get an update from these guys. I know they've been working on some big stuff for a while. So, it's one of these situations where we could see some news come out and boom, or, this rare earth sector is really ripe for a re-rating, especially as this entire marketplace on the commodity side is heating up in pricing. But in any event, I like Medallion. I'll give you an update with more facts soon. And then Goldx, my status on this, Jim. I love it. I think it's such a cheap play. There's so much there that is being discounted in terms of the valuation. And what I will be doing next, and if you didn't see it, you can go on realvision.com. I was a little disappointed that they made it a 4 stocks to buy feature because I really just wanted to focus on Goldx and Newfound Gold. But we did an update on McEwen Mining and International Tower Hill, and I like them both back at these prices too. So they kind of ran with the 4 company update, but you can see that on realvision.com or on the YouTube channel, Real Vision Finance. That was done, a little more than a week. It was a little more than a week ago Friday, it published. And so it gets into the details of what I think about Goldx, which I'm very bullish. I put my name all over it with the Real Vision crowd, which is substantial. And it's one of my top picks. I think the thing that I've learned, guys, with all this stuff, it's so much more about our mindset, where we're at, how we view things, our position in life, in terms of what's going on. Because if you've got a lot of shit going on and stressed out and, maybe depressed, we've got a lot of people that are in that boat with COVID, and it's a shame that we're sacrificing, people's lives and businesses, and the mental health fallout is so substantial, so much more substantial, in my opinion, than making sure everybody wears a mask and stays out of as a grown adult, stays out of even an outdoor area in LA of a restaurant owner who, these people can only hold on so long. But in any event, it comes down to the ability to, even if you're not rich, if you're a small investor, you have to act like you're rich. You have to make decisions like you're rich, or you're not going to become rich. And one of the big things that I've gotten into myself this last few years is on things like any of these stocks. Okay, look at First Vanadium, look at Goldx, Medallion. I just don't sweat the outcome too much. If I commit to it as a long-term investment, and again, if you're on our premium list in the model portfolio, I talk a lot about selling a third at a triple for these type of names, these speculative names. So you can just say, look, I have no principal risk. I'm good. And you can make better decisions, I feel like, with that 2/3, because that 2/3 is essentially going to be a huge and massive profit potential as things continue to go higher. Let me just check who this is real quick. I don't know who that was. New place, elevator opens up into the apartment, and I don't know. Wasn't expecting any guess. But what I'm getting at is this. It's about the format and the, what is the word I'm looking for? The outline of our plan, of our principles in terms of this is what I do. It doesn't matter about the company, okay? Because this is first things first. It does matter about the company, and we drill down in those and stay on top of what's going on. But if you really want to go to the next level, I feel for me going to the next level, it has been, here are my principles. And if nothing has changed, and that's why going in the beginning, in terms of position sizing and the amount of money that we put in, I've made the huge mistake before of biting off more than I can chew. Bad times come, and I have to sell at the worst time to pay the bills. And that's a common, thing. So to avoid that, it's about getting in at a manageable level. And as things continue to go and prove out the thesis, or you get a dip based on market reasons or whatever else, nibbling a little bit more. I mean, that's why I've made so much money in crypto. I think it's been two things. One is just chipping away from 2018, under 8,000 automatic purchases. Boom, boom, boom. I wasn't above doing $50 or whatever, so hold on one second. Hello. Might be a delivery, I'm guessing. Yes. Okay. Here we go. Instacart, baby. Instacart. Okay, so what I was talking about there is getting into the position sizes that we know we can hold on to for the long-term portion of the portfolio. If something pops quick, and we have that happen a lot, you can get capital freed up quicker, right? That's great, but I don't always plan on it unless it is distinguished as a swing trade. I don't do day trades. Swing trades can be anywhere from like 2 weeks to 2 months in my mind, in terms of an intermediate move. And if it's defined as that trade, I'm not going to stay in it and be an investor. That means that I will just I'll cut bait if it doesn't work out the way that I had thought it would, even if it's a loss. It doesn't matter what my cost average is or anything else. And these are the type of things that I think I've learned as I've gotten more experience and looked at how did I end up screwing this up in the past. And there's so many of these little nuances, right? And anyway, I wanted to get on this topic because I feel like even with our elite members, believe it or not, who are very, very sophisticated, very successful to varying degrees, and premium members we've got pros that are much smarter than I am and have more money than I do, but I tend to be able to talk to people and figure out, look, I'm not going to make a comment unless I see a glaring blind spot in what you're doing. And there are just a number of things that continue to come up that I think are going to prohibit investors from making the most money that we can. And it's the same old stuff, but it's a real problem. People can't really let go of losers. Position sizing is a big thing. And what I was starting to talk about with all this is simply that you want to look at these things in terms of where you are at in your life. If you aren't seeing things really clearly, that's why I was talking about just being a little bit of a mess. You don't want to be as active, okay? You don't want to be as active in doing things, and over trading was always a big problem for me. And especially when you don't have good things going on, you need the activity to sort of stimulate yourself. I would really try to shy away from that and just chill for a moment, until you get into a bit better place, because these things always affect our returns. They always affect our decisions. And to me, it's all just connected. My personal life, my physical health, my spiritual life, my business, my trading, my investing, they're all absolutely connected. And so if you're in a pretty good spot yourself, or you're working on that, then you're going to make better decisions. And I think that whether it's Medallion or First Vanadium or Goldx that ends up exploding first, I don't know. I don't know the answer to that, but I don't care, because when one of them goes, it goes. And, I'm sticking with, for me, the sell a third at a triple in these smaller ones makes a lot of sense. And the second tranche is a little bit harder to define in terms of where to exactly get out. But the third tranche, and because you can do this however you like, but the third tranche for me on a lot of these juniors, it has nothing to do with the companies whatsoever, by the way. The first tranche, the third tranche, it doesn't matter. It's about pricing and movement and position sizing, because when you have something go up 10x, it becomes a big part of your portfolio. A lot of times it's bloated versus the other positions, and I trim that down just to bring it a little bit closer to earth. But the third tranche is set for when I think the gold and silver bull market in mining stocks has gotten way out of hand, and it's getting towards the knock, knock, knock. This thing's it's getting too crazy, and I'm taking a step aside. So that's really what that third tranche is for. It has nothing to do with the company, and the first third doesn't either, because if it hits a third, I don't care if there's news coming the next day or the next week. It just doesn't matter. I will stick with that discipline and quit, worrying about a penny here or a penny there. It just doesn't matter. It doesn't have to be a third on the nose. It can be around a third, and getting used to that and sticking to that has been really key for me. And then let's go to Sona TraySafe. So TraySafe looks incredible. I think TraySafe, the way that it's been trading is very impressive. And I think it's going higher. I mean, it's about to explode higher, I think, just looking at it from a technical perspective. And for what it's worth, this is kind of a, like a side comment, but I think it speaks some volumes, is that I'm fairly close with the chairman, James Passon, and him and I text here and there. And last week he sent me a meme that was like a little video that had this guy at the driving range, and he was just cranking them. Boom, boom, boom. Guy dropping the ball. Boom, boom. Every one of them, just perfect drives. And he had the like a GIF, the face of Wayne Lloyd on the guy, and it said something to the effect of Wayne crushing earnings every quarter, or revenue earnings every quarter, which indicated, and I didn't see anything recent on the financials, but what that told me is they're killing it. They've been building a real business, and they are executing on it. I don't know what the last filing or the next filing, when that's coming. It should be fairly soon. I guess for Q4 it should be out. If they're doing well, I would hope they would get it out within a few weeks, by the end of February, but they've got until March. Sometimes it takes these small companies a little while, but if they're very good numbers, then they're going to want to get that out. But they've been building this TraySafe business, not just around COVID and the quarantine bracelets, but in other contact tracing arenas. And we see the sporting events getting signed up and more governments ordering product. So I'm excited to see where their numbers are at. I can tell you technically, and just watching the stock trade recently, I'm very bullish. I think it's going to end up going at least to like $2 Canadian. And Sona, I don't even know. I honestly do not even know. And I hate saying this, guys, because I know a lot of people got in at different times, and it just, this is how it goes with the newsletter stuff, because everybody hears things in different times, and, ends up taking action at different times and prices based on your personal situation. Versus like, here's the fund that I run, and this is what the returns were, which is probably my next move, by the way, because, I have a lot more success with trading these things and, essentially managing my portfolio than I do with giving out recommendations that I don't control what's going on, and people do it all over the board. Some people are better than I am, but to do it consistently, like with Sona is a good example. Bought that at, what was it, 60 cents, 60 some cents or whatever it was, in the 60s initially, about not even a year ago, ran up to $14. We flipped a little bit, got back in at $1. We flipped some at 145, if I recall, a third. Bought it back at like 105, 110. So we're fully loaded, even more than we had before that. Some profits booked. And the next sell, which is really the first sell, was over $9. And that was a sell at least a quarter to a third, because that was like 15x, 13 to 15x. And selling even a quarter at that point, you've blocked in huge profits. And then we traded here and there and back and forth. And I think the thing is that because I had, and then the next recommendation was around 13.75 to 14 and a quarter to sell another third to a quarter. So I made a lot of money on Sona, and it sucks that they've had the trajectory they've had. I do believe in the technology. I think they've got cutting edge science, and eventually that's going to end up paying dividends. In the short term, I don't even know exactly where they're at. I'm not chasing them down to find out what is the next step with the various government agencies, and they've had some good movement with regard to being able to sell in Europe. So I expect that we're going to see some action. It's better than the for research only title that they were stuck with before. But, I think we'll see with Sona. It's not a main position for me. It's a bonus position. And I do believe that they've got the real deal. It's just, I like it here, actually. I mean, I'm looking at the chart too, and it's probably a very good entry point because it's right above the 50-day moving average. And it could be forming a somewhat inverse head and shoulders pattern here. I'm going to look more at it tomorrow. And maybe I will buy some more. Let's see. Let's see here. Bitcoin 100K 2021. Easy. It's easy, Tassin. I mean, look at it today. There's no supply. There's no supply. You've got corporate balance sheets flowing into this thing. Central banks are going to be next, FYI, if they're not already in there buying, which I think they are. And you have so much of this stuff locked up and such a low float as it is. 100K is not going to be a problem, I don't think, in 2021. My target is, I have to have a bit of a wide range on this because I could be proven wrong. I don't want to get too granular because I will flow with it a little bit in terms of what I'm seeing. If I have to guess, 150 to 225, 150 to 200 is probably a median. And I would give that 12 months. I wouldn't say necessarily, by the end of the year, but I don't know. We'll see. It's definitely going over 100, I feel. And at that price, I'll be taking a little off the table. I haven't really much. Anything I have taken off the table was from, for example, the layup trade we had when it broke 20K. And I pounded the table over and over and over. Be ready, be ready, be ready. I was ready, and I ended up taking a bunch of cash that I had saved up, and I just bounced it into Bitcoin at 20,500 or 600. It was somewhere in that cost average. Flipped it at just under 28,000. It was quick. I knew it would be quick. It was like 37, 39%, just bonus, very fast for trading. Still kept the core position, brought that cost average down lower. But yeah, it's going to be a good year. Heliostar, I do not know. Torture. What's up, Ramon? How you doing? I'm not buying crypto miners, Brent, and I've talked about this at least a ton on the premium side, but I think I've talked about it a little bit to the e-letter as well. Why are you going to buy a miner instead of buying the crypto? Maybe you can answer that with regard to why you were looking at crypto miners. Now, this is my take, and I'm going to be blunt. I'm not talking just to you at all. I'm not talking just to you one bit, Brent. It's more of a generality, which is, why would you pay for a company? Like, let's say you've got an Ethereum miner. You're going to pay for everything from everybody's salary, all of their expenses to be a listed public company, all of their operating expenses every month, all of their capital expenditures to get this stuff up and running as a miner, and all kinds of other incidental costs. And they only benefit as the crypto goes higher, minus those costs. Why wouldn't you just buy the cryptocurrency? And even like with the GBTC and stuff, it's fine if it has like less than a 7, 10, maybe 10, but 5 or less, premium to net asset value. Sure, go do it. But the only reason that people look for the miners or these like ETF-esque plays is because you're lazy. You're lazy. I mean, look, I'm lazy in other areas of my life, but I'm not in crypto. This isn't going away, guys. You got to look at this this is a new way to do things. And if you don't do it now, you're going to do it later. It's going to be a part of all of our lives. So you want to own the crypto itself because you're going to end up making the most money being directly connected to the price rise in the cryptocurrency, and not do it with a 30% premium to net asset value in GBTC. That all of a sudden, just like we saw fairly recently, when Bitcoin is going up, it's not even moving because the institutions are arbitraging that fat. When you could have owned the Bitcoin and been up, 20, 30%, and the GBTC didn't move. Why do you want to deal with that stuff? The only way you could justify it is if you only have money in an RSP or an IRA that you can access. And then it's better than nothing. In the crypto miners, I mean, there's just better stuff than crypto miners. You look at like Cypherpunk, HODL, on the Canadian exchange. This is a deal, KHRIF on the US. I know it because I own a lot of it. This is a deal that I found. They own 291 Bitcoin on the balance sheet. They have investments in very, very exciting high growth venture areas like the Wasabi wallet and a number of other ones that I think are just really super, going to be super successful. So things like that where, like Galaxy Digital, I've talked about that here in the e-letter 2 years ago at $1 Canadian, $1.25, $1.30, $1.40. I made it a core position because they are like, you're getting all the venture capital top deal flow, as well as the crypto on the balance sheet. They're not a miner. In fact, what they do is they're becoming like a Goldman Sachs of crypto. So they're actually making money in different ways. And then you also get the upside in crypto and you get the juice on, these guys see every deal, the best deals, like, them and the Winklevoss twins and Andreessen Horowitz and Blockchain Capital. And, these are the guys that see the sexy stuff first. And so you get basically you get an adjunct to that by being a shareholder of these type of deals. HODL reminds me a little bit of an earlier version of Galaxy. Galaxy, that thing's probably $15 now, up from, $1.25, call it cost average that we have. But here's the thing, guys, it took time. You know what I mean? It took time, but my whole thing is, $14.95 Canadian, crazy. My whole thing is that you've got to learn, you've got to be willing, I think, to give something time. And if you get a 10 bagger, if you get a 5 bagger, if you get, God blessed, 20 bagger, it doesn't matter how long it takes. It really doesn't, because it'll change your life. If you get a couple of those, that's how you shift, your status. I think that's what happened for me. So no crypto miners, Brent. And I would just encourage you, wherever you are, if you're a non-US resident or citizen, open an account at Binance.com. The video that I did this morning has a link to where you get commission kickbacks, which aren't even that high anyway, and preferred vetting of your account to open it, which is a tough thing in this market when it's so busy and it's up and everybody's fumbling to get in. Coinbase crashed last week. If you are a US person, I recommend Coinbase Pro, to get yourself in the game for crypto. It's very easy. Anybody who's got an online brokerage account or online bank account, it's the same thing. You just link it with your bank, your checking account, you send the money over when it's available, you buy the crypto, they hold it in a wallet for you, and when you want to sell it, you sell it. You can send the dollars, Canadian or US or euros, back to your bank account, but I wouldn't even think about that because I don't see any reason to go back into fiat at all with a lot of this money. After a discovery for a microcap, do you have a rule of thumb for exit? Yeah, 300%, et cetera. Dr. James, I talked about this a little bit earlier, which is that my usual, I say usual because there are some exceptions, but usually, and this is like very often now, I sell a third around a triple. And I say around, when I say around, it's more like below a triple. It's not above, but I will cost average out of it at different areas. I don't get caught up in a penny here, a penny there, or this or that. Will give you a couple of examples, and there were some that I let ride a little bit longer just because I saw that they were going higher and I watched it. But that first third to get your principal out at a triple, to me, it's a no-brainer. You're going to make better decisions with the second and third tranches. I sell in tranches. That second tranche could be a couple few multiples higher than the triple to just raise, if I've got other things that I believe have better risk reward, or I could hold it a little bit longer. I mean, we did that with Sona, where it ended up being like a 25 bagger from the 60 some cents to $14 for that second tranche. So I held on a little bit longer in certain cases like that. But, the last third tranche, I still have it on. It's all free. I own the Sona, it's gone all the way back to $2. Don't care, already made a boatload of money. But the third tranche, just to reiterate for me, is when I see it like warning signs that the top of the market has come and we're seeing like mania type activity. It has nothing to do in any of these cases with the sales of the actual specific company and what they're doing. You guys can let me know if that makes sense. I would actually love feedback on this matter because I talk about this a lot and I know some people hear me, but I don't know if it really resonates because we're so used to like, what's up with this stock? What's up with this company? And it does matter. Don't get me wrong. I just have separated, and I like to think, transmuted the level in which I look at the playing fields. And instead of just always looking at these individual isolated companies and what's coming, where's the news, it doesn't work. It just doesn't work. So I look at the format that I've built. And whenever that third, and you could be more conservative, by the way, you can play this any way you want. You could sell half at a double, half at a double and then a quarter and a quarter, whatever works for you. But I think you have to get your principal out of these plays within a third or within a triple of, the price that you bought in at. And so I'd love to hear feedback on that. I don't know about MDL insider selling. The only time Don has done that, I'll just check while we're on, is if he was doing, they were doing a financing or he was exercising options. Because sometimes the management of these groups have to exercise options and they need to raise cash, but I haven't seen this. So let me see. I'll tell you right now if it's legit, selling. Okay, so we've got, I see, okay. It's a lot of, let me just get this out of here. Here we go. 1 second. I got to go on my other browser because I have a blocker on that one. I see a lot of the small sales. I'll ask him what's up. My guess is, Don needs income as well. He's not the CEO anymore. So I don't know if that's just correlated to him raising some regular cash. Let me take a look at the details again. I think it looks worse than it is because it's a lot of the, it's a lot of sales that are listed, but they're all very, very small, 15,000. And it was all right around the last week in January. Yeah, I wouldn't worry about it too much. You know how much Don owns of this company? He owns a ton. He's put so much of his own money and life into this thing. I'll ask him about it, but you're talking about 100,000 shares maybe at max. He might have just needed to buy a car. I don't see anything too concerning, actually, but good point, and thanks for bringing it up. CWS, Dr. James. CEO selling Klondike and options awarded. I don't know about Klondike. I just don't know anything about it. Don't know. It is a concern if you're talking about selling all of your shares as a CEO. That's a little worrying. Sold today. Yeah, that's where I think there's another really important point, James. Why buy back in necessarily? That's our normal first thought. If it goes lower, I'll buy back in. But what about putting some of that money into another area that is not correlated with the miners? Depends if you've got a big portion of your portfolio exposed to this area or a small amount. If it's a small amount and you still want to be adding, that could make sense. But for me, I've been very active over the last year when I take these big profits in mining. And thank God I was able to do it. I was moving a lot of that into crypto. But I also have, very, very safe cash with interest in the crypto world that I've talked about, certainly in Premium and Elite, and we'll talk about more in the crypto newsletters here soon. I'm getting 8 to 10% on my US dollars. So I'm moving it into compound interest in addition to that's cash. So say some bloody mess happens in the market and I really feel like, where's my cash? I can pull it. I can go buy this stuff back. But, 90% silver shares. You have your nose open, James. That's what I'm saying. You have your nose open, which means pop, you could get punched right in the nose and it's broken. With 90% of your money, if you're talking about 90% of your investable assets in silver shares, that's really aggressive. I mean, I just hope you have an exit plan. And if you're looking to buy back in the same sector, just know that you're going to pay the piper one day. And that could just be simply in the form of a really big flush that has you on your heels and you're so exposed, okay? That you get run over by a truck and it's a mid bull market shakeout and nothing more. And it keeps going, but it'll scare the bejesus out of us. So, anyway, it looks like you're going to cash soon. It sounds like you're active and you know what you're doing. So good for you. I'm glad you doubled. I just have been very careful about making the same mistake for myself, which is that I stay in the same sector over and over and over. I'm long the VIX. I just started buying the VIX slowly a couple of days ago. And I think volatility, I don't know when it comes, but it's going to come. And I think it'll be pretty fierce the next time it does. February can have some, bumps in my experience, certainly in tech. It just seems like a seasonal thing. But in any event, anybody else have anything? I'm going to cut this off probably in a few minutes, definitely within 9. If we've got anything else you guys want to chat about. Hey, Jerry, Bravada. How much did they do? I don't see a Bravada raise. Did they, I don't even know. I mean, this is how out of the loop I've been a little bit, and I still own a huge slug of Bravada. I knew they needed to do a raise fairly soon because they have to pay the bills. Yeah, I don't know. They must have either they've issued a raise and contacted you before they've announced it. I don't know. If that's the case, how big is it? What price is it? I don't even know. I'll text them tonight and find out. The thing with the miners like this, they always have to continue to do some sort of a raise, whether it's to drill or just to pay the expenses. So as long as it's not a lot, it's fine. Because they have to do so and they have a pretty reasonable low burn rate. So I'm not worried about it at all, unless they're doing like a $3 million raise at 9 cents or something. It's ridiculous. Selling some minor positions that aren't moving for more crypto exposure since it's possible that gold won't break out for a while. I don't know if gold will break out tomorrow or if it'll take a while. I don't really know. I'm keeping an open mind. I've gone, a good chunk into cash. Per the Elite and Premium notes that I've put out recently, but I'm very open. There is a big flagging pattern happening. It's just continued to get rejected on the ceilings for gold. It could go through. It could go through this week. I'd like to see a weekly close up in the high 1800s. And then I may, shift when it does, if and when it does go through that flagging pattern, those ceilings on the lower highs and lower lows, which is what it's been doing since August. I'll go in deeper into gold and silver miners. But yes, okay, Jerry, cool. Thank you for joining. So I don't know, Thomas, I think we have to be very careful about jumping around because crypto's hot right now and gold is not. And so just from what comes up for me, I'd just be a little bit cautious. The only way to do the crypto exposure and to, why do more crypto exposure is if something has changed fundamentally in the gold, market or plays that we own there. Otherwise, I don't see any reason to sell there to go chase crypto. Not that you're chasing crypto and it's not going to go higher, but it's a very volatile area. And we could see that turn around and gold rocket this week or next week. It could happen. And it really, then you just are like, damn, I can never catch a break, right? So just be careful. I think with the crypto exposure, you just have to make sure what you're going in, why you're going into it, what your plan is. Like I talked about Ethereum today, you should have some Ethereum. If you've got a couple of duds and you want to dump them and you don't have any crypto, yeah, you should have some crypto. But, if you've got a little bit of that, you've got some miners and you've just been way frustrated, but the companies that you're in, that you're thinking about selling, still have good stuff going on, fundamentally or sound, trading cheap. I don't really try to jump around too much with that stuff. And I don't know your financial position, but it's like, I don't know what you're talking about in terms of specific companies and things of that nature, but that's what I would say is like, just be a little bit careful. And then I'm keeping an open mind as to whether gold takes a while to go up or it doesn't. I'm in a good amount of cash right now, so I feel good about that. And when I see the breakout, I'll know and I'll go right back in. It doesn't take long. It takes me 3 minutes to get huge positions back on in the liquid names. And we usually have a lag in the juniors. So that's going to be it for tonight, guys. I'm appreciative of those of you that joined. I'll record this. It was recorded. I'll release it to some of the other folks. And really appreciate the YouTube subscribers. That's why I do these things for you guys. And let's do it again soon. Have a good night.